Well, the Australian market has been seesawing around the current level for 3 weeks or so, having lost 10% in the first 3 weeks of May after anti-austerity parties won elections in Greece and France. The shift of the spotlight to Spain in recent weeks hasn't really caused another down leg of the market yet, just wary volatility. And what's happened on the Australian market has basically mirrored what's happened in the US, Germany and Japan. Today, banks lost what they gained yesterday, while iron ore miners went up. Whitehaven Coal jumped 4.5% after the company said its largest shareholder, Nathan Tinkler, wants to buy the 79% he doesn't own. Qantas kept going up, also in anticipation of a takeover offer that may or may not come. Global markets all went up last night and today for no apparent reason. In fact, the ratings agency Fitch downgraded some Spanish banks, and apart from that, there was no news. Over on commodity markets, prices also went up. Gold more than 1%, oil a bit less, base metals less again. And the Australian dollar is crawling back towards parity, it would seem, as foreign exchange markets gradually regain some stability. Today's economic news was consumer sentiment, a bit better in June than May, but the Reserve Bank will probably be disappointed that sentiment is below where it was last year, despite 125 basis points of rate cuts over 6 months. I guess that's why they've all trooped up to Brisbane to talk about it today. Here's a chart from the Reserve Bank Governor's speech to today's Economic Forum in Brisbane, which I thought was pretty interesting. It's the Australian dollar against the US dollar since 1900 in nominal terms and then in real terms, that is adjusted for inflation. On that basis, it's now the highest it's ever been, higher even than the little spike in 1917 when there was another mining boom based around Broken Hill. And that's finance.